Zip has over 1.2 million customers, and the most recent quarter saw us growing over 100% year on year for all of our major metrics: customers, revenue, and transaction volume.
Welcome, my name is Vishal Tekshanlani. Today I'm speaking to the CEO and Managing Director of Zipco, Larry Diamond. Larry, great to have you here. How are you?
I'm doing very well. Thanks for having me on the show, Vishal.
No worries, Larry. So let's get straight into it, Larry. So Zipco's share price, what a ripper for 6 months you've had. The share price has gone from just above $1 to nearly $4.
Yep.
Congratulations, and you've exceeded $1 billion.
Yeah, thank you very much.
No worries. What do you attribute that strong performance to?
So yeah, it's been an amazing 4-month ride. If we kind of rewind the clock a little bit to last year, we rolled out our native app in August, which has already had close to 800,000 downloads and is a top 10 app in the Google Play and also the iOS stores, about above brands of the likes of PayPal. We also signed up some major retailers, some of our biggest retailers to date, the likes of Kmart, Chemist Warehouse, Bunnings, Officeworks, and kind of Target. And we also did a kind of big rebrand as well in about August last year. And so when you kind of bundle all those facts together, what we started to see was an acceleration in growth of our users. And so those results came through in the recent quarter, where we generated about $23 million of revenue, which is almost an annualized run rate of close to $90 million. So I think when you kind of look at that growth, market finally kind of seeing that we've built a really strong product in market that's disrupting the credit card, and a lot of the regulatory uncertainty that we saw last year, those clouds of uncertainty have now departed.
Okay, so let's hone in on that Kmart bit. That's one of the most significant partnerships you announced, and that was just earlier this week.
Yep.
Talk to us about the importance of that deal and put that in the context of Zip's overall growth strategy.
So I think, for us, our big ambition is to disrupt the credit card because we're offering a better, fairer and digital alternative focused on interest-free. So we want more customers transacting in more places more often. And so what's really important is that the big retailers start to adopt alternative payments. And so, we've got a great relationship with the Wes Group. Last year we signed up Officeworks and Target. We've just signed up Kmart. Kmart's obviously one of Australia's leading retailers, so we're kind of extremely excited that Zip's going to be accepted online. But it's critical for us to be successful that every major retailer that you shop at offers Zip both online and in store. And I think what we're starting to see now is at the big end of town is readily adopting alternative payments. And so we're seeing some great tailwinds moving into FY20.
Okay, and overseas expansion. You're doing well in Australia. Will you roll this out overseas?
Look, for us, Australia is a huge market. We're processing an annual rate of about $1 billion+ of transaction volume. I mean, the opportunity set for us is, there's close to $1 trillion of payments in Australia. So we've got a fraction of the market. So Australia is still a huge opportunity for us because, again, we're the credit card, so we can be used for fuel, coffee, groceries, health services. So there's a long way to go. But having said that, we have just rolled out in New Zealand, which is our first offshore market expansion. And we see the world as a very, very exciting place. So while we're not jumping there just yet, we are watching it with very keen eyes. And those markets also are incredibly early on in their stages of credit card disruption.
Okay, I'm sure investors will be watching that very keenly as well. Let's turn to competition. So one of the most interesting things I heard you say last year at the ASX Investor Day conference was that retailers are trying to find the right payment mix for their customers. Credit cards, and increasingly buy now, pay later solutions. So we've got Zip. Some retailers are offering Afterpay and Split It as well. Is this becoming a crowded market?
Look, I think when you look at the customer behaviour, credit cards really sort of stagnating. There's a huge fallout of credit card demand. What we are seeing is the rise of debit cards and also digital wallets, including some of the buy now, pay later products. Now, as a retailer, when you have a customer coming into the store, it's really important that you can engage with that customer, that you're not going to miss out on a sale. And so retailers are finally starting to see these trends and realising we must offer the right mix. So Zip, Afterpay, but we're also seeing a lot of retailers starting to offer Alipay, to kind of target that market. So I think it's really important that retailers offer the right payment mix. Having said that, however, you're not going to have 5 of the same thing. So I think it's about having that right mix. And I think Afterpay has been a very successful story. Zip's a very different product. We are more the credit card disruptor. So all the volume going through the Visa and MasterCard rails, we want to see coming onto our digital wallet.
So that's a unique value proposition there. Okay. And lastly, let's turn to risks, Larry. Your company's become a unicorn. You've exceeded $1 billion in market cap. But what are some of the risks that investors should be aware of, particularly bad debts?
Yeah, so I think, obviously we are a credit issuer. Part of our job is to bring customers onto the platform, but it's really important that we diligence our customers. And so we do a lot of things around ID checks, credit checks on all of our applicants. We also pull bank transactional data. Now, having said that, losses are part of the business model. So right now we have loss rates of about 1.7, 1.8% of gross receivables, which is actually a great number when you look at all of our peers.
Sure.
But having said that, in a macro downturn, you will start to see higher risk. Our view is that it's actually a really strong market outlook at the moment. Okay. And also because our model recycles capital so quickly, our ability to see customer behavior and respond to it by tweaking the engine, not letting as many customers onto the platform, stopping spending is really, really easy because we're digital and we have that high frequency. But certainly credit is something to keep an eye out for. And our view is, it's kind of the company in the garage around the corner coming up with the new technology that's our biggest worry.
No worries. Okay, Larry, thank you so much for all that information. Thank you for coming in to talk to me and our community of Zip shareholders on NabTrade.
Thanks so much.
No worries. I hope you found this video informative. Now, please remember what we talked about today isn't a recommendation to transact in Zip shares. If that's something you're thinking of doing, please do your research and consider seeking financial advice. My name is Vishal Texanani, and I'll see you next time.